Good evening, guys. How are you doing? I believe your day was cool, was good. The Lord is our strength. In Jesus' name. All right. I want to continue with the question on IS 36 today. By the grace of God, I want to continue with that question. If you are a new viewers, I welcome you to Blessed Institute channel, YouTube channel, and if you are returning viewers, I welcome you as well once again, and please try to subscribe to this channel just to encourage us. And if you have any question, you can actually drop it so that we can attend to them. And even if you want us to solve any question, or you have any question as touching this particular topic or any other topic we'll be treating subsequently, you can actually drop them in the comment section. All right. Excuse me. Let's go straight to the point. I'm going to solve question 1, P question 1 and P question 2. This is actually an exam type question, so I'm going to solve the two questions this evening. ABC Limited acquired, that is P question 1. ABC Limited acquired equipment on January 1st, 2018 for 100 million. The equipment has an estimated useful life of 5 years and a residual value of 20 million. At the end of 2020, the equipment carrying amount is 60 million. However, due to changes in market condition, the equipment recoverable amount is estimated to be 40 million. Required, calculate the impairment loss needs to be recognized in financial statement. Number figure 2, show the entries to record the transaction. This is a very, very simple question, very, very cheap question. If you come across this type of question in the exam, it is actually a bonus for you. It should be a bonus for you. I assume it should be a bonus for you. So now you don't need to be calculating or disturbing yourself again, calculating carrying amount again, because they have already calculated the carrying amount you need for you. Yes, they gave you the parameters for the calculation of carrying amount, but you don't need that again because they have already calculated the carrying amount you need. That is the carrying amount for 2020. So you were told that 100 million is the cost, 20 million is the scrap value. You don't need all those informations. You don't need them because you have already been told that at the end of 2020 the equipment carrying amount is what is 60 million. So let us go to the solution. Excuse me please. Our carrying amount is 60 million. Our carrying amount is 60 million. 60 million. Then our recoverable amount is how much? Is 40 million. We were told that the equipment recoverable amount is estimated to be 40 million. So you come here, say that 40 million. So you subtract it from each other. That will be what? Impairment loss. Impairment loss, which will now be what? If you subtract 60 million from 40 million, we have 20 million. So this is the what? This is your impairment loss. So you are done with A like that. So B, Roman figure 2, you were asked to do what? You were asked to show the journal entry. So just say that journal entry. So it's a journal entry. Are you getting me like this? So in your statement of financial position, your statement is statement of financial position. So you will recognize carrying amount, that is your carrying amount now. Your carrying amount for that particular asset will now be what? Will now be 60 million minus impairment loss 20 million. 20 million. So that will give us so the carrying amount will now be 40 million like that. So we are recognizing 40 million inside your statement of financial position. Are you getting like that? That will be your carrying amount for that PPE. Or let me just say PPE. That particular asset like that, PPE. So it will now be 60 million minus. That is the carrying amount of that asset minus what? Minus impairment loss. Then your what? Your statement of financial position, your statement of income statement. Your income statement will now be what? Your expenses. Under your expenses, you will have impairment loss, which happens to be what? It happens to be 20 million. So that is what you are asked to do. That is what you are asked to do. I believe it is all clear. Thank you. So let us go to the PQ question. To PQ2, XYZ Limited acquired a manufacturing facility in 2018 for 3.15 million naira. 3.15 million naira. The facilities assets and liability are as followed. We have property, plant, and equipment, which happens to be 2.4 million cost, with an estimated useful life of 15 years and residual value of 0.3 million. Inventory 0.4 million. Account receivables 0.2 million. Account payables 0.15 million. At the end of 2022, the facility's financial performance has deteriorated due to increased competition. The PPE carrying amount is 1.98 million. Don't forget the PPE. We are only dealing with PPE here. Are you getting me now? It's on PPE that we calculate impairment loss. Are you getting me? So now you can actually look into my voice video to actually understand much about that, about the impairment and other terminologies. So now we were told that at the end of 2022, the facility's financial performance has deteriorated due to increased competition. The PPE carrying amount is what? 1.98. So we have seen our carrying amount. You don't need to be subtracting depreciation again. Are you getting me now? They will give you your carrying amount. So if they don't give you the carrying amount, they will give you the parameters for the calculation of carrying amount. That is the cost, your residual value, if any, the useful life of an asset, and then you will calculate. You know how we calculate our depreciation now. Then you subtract it from your cost to get your carrying amount. Are you getting me now? Then the facilities cash flow are estimated as follow. So we have year 1, year 2, year 3, year 4. The discount rate is 10%. The fair value less cost to sales is estimated to be 1.5 million. So let me try to write. Okay. Let me just try to write the parameters out. Let me write the parameters out. 1.98 million naira. Then we were told that our fair value less cost to sales. So most of the time, this one now they have given it to you straight away. Fair value less cost to sales. At times they will just give you the fair value and they will give you your cost to sales. Cost to sales, they are the expenses you incur in selling that particular asset. But in this particular question now, they have given us the fair value less cost to sales straight away. So they have given us straight away. They will just fair value less cost to sales is 1.5 million. So just write your 1.5 million here. 1.5 million naira. Let's say 1.5 million naira. 1.5 million. I believe we all get it like that. So that's our fair value less cost to sales. Meanwhile, don't forget impairment loss. Don't forget the formula for impairment loss. Impairment loss equal to carrying amount minus recoverable amount. Don't forget this. It's very, very important. Impairment loss is carrying amount minus recoverable amount. And we know how to calculate carrying amount now. Your carrying amount is your cost minus depreciation. And if you are given straight away, you don't need to calculate. But most of the time, they will not give you the recoverable amount. In a standardized examination question, they will not give you what? They will not give you recoverable amount. You will be the one to calculate recoverable amount yourself. And what is recoverable amount? Recoverable amount, recoverable amount is what? Is higher of what? Higher of fair value. Let me write it out. Fair value less cost to sales. Higher of fair value less cost to sales and value in use. So whichever one that is higher out of fair value less cost to sales and value in use is what you are going to use as your is what is going to represent your what? Represent your recoverable amount. Do you get it now? So now this our question, they give us carrying amount, we have seen it. They gave us fair value less cost to sales, which is 1.5 million, but we don't know the value in use. So the value in use is the what? Is the present value of your future cash flow. Now we will need to calculate. We have seen carrying amount, we have seen fair value less cost, but we don't know our value in use. So we'll calculate our value in use. Don't forget all this one, they are just notes. So let me say calculation of value in use. So just the way you used to calculate your present value. Are you getting like that? That's what you are going to do here. Let me just say that here cash flow, that is inflow in this wise. Now we have discount factor, then we have what? We have our present value, are we together like this? So now year one, if you check that question, we have year 1 to year 4. I will take it there very soon. Year 3, year 4. Then our cash flow. Let us go back to the question. You see now we have 4 years. Oh, we have more than 4 years. So we have year 1, year 2, year 3, then year 4 to 15. That means, let me change the format. Please. Let me change the format. All right, thank you for your patience. I should have used it the way I actually did it the other time, but I don't want to be writing year 4 like I just want to make it more simplified. Share you get? Because I noticed that if you check the question now, the question we have for year 1, this question PQ2. Yeah, those we have year 1 100,000, year 2 150,000, year 3 200,000. So from year 4 to year 15, it is going to generate what? 250,000 naira per annum. That means it will generate year 250,000 in year 4, 250,000 in year 5, 250,000 in year 6 till year 15. So in that case like that, we can actually split it, but it's going to take much of our time. That's why I will not say year 4 250,000, year 5 250,000, year 6 250,000, year 7 250,000, year 8 250,000 till I get to year 15. That's a lot of stress on my own part. So instead of that, you can actually use annuity formula. Are you getting that? For year 4 to year 15, you can use annuity formula. You know how you calculate your discount factor now? I'm going to try to explain that as well, even as I solve the question. So let us take one after the other. We have year 1 100,000, year 2 150,000, 100,000 year 1, 100,000, and year 2 150,000. So year 3 200,000, 250,000, 200,000, and then 250,000. Are you getting like that? So our discount factor, how do we calculate our discount factor? Hope you don't forget that formula. You say that 1 divided by You open bracket 1 plus r, right? Close bracket, raised to power, minus, sorry, raised to power, raised to power 1, yeah, raised to power 1. Are you getting me? Or you say that 1 plus r, put it in a bracket, raised to power minus 1, minus 1, minus 1. So you get, hey, you can do it like that as well. So it's still the same thing. That is for discount factor, for discount factor for 1 year. So if you want to do for 4 year like that, or no, you want to do multiple years together, you will use annuity formula. You can try to research on that just to make it easy for you. So I've actually tried to calculate the what this. So for year one now we have 0.0. Don't forget we are using 10%. Sorry, 10%. Our discount factor is 10%. It's inside the question. It's inside the question. 10%. Let us come and check it inside the question. We were told that the discount rate is what? 10%. So it is 10%. So for year one, we have 0.090, 0. This for year one, 0.8246. Year two, 0.8246. Year three, 0.7513. 0.7513. Annuity formula, we'll calculate this one. We'll calculate later. Year 4 to year 15, let me not leave it like that. You cannot come and waste my time. Now, let us do this one. I will just say that C11 equal to some C11 multiplied by D11. So we get that one. For this equal to some C12 multiplied by D12. C13 is equal to C some C13 to bracket D13. So this one now, let us try to do this one now. Let us try to do it. Thank you for your patience. Now, annuity for the what? For 4 to 15 years. You can actually use annuity to calculate the discount factor for this last year. Don't forget, there are two ways in which you can do that, but I won't be able to go into that now. It is either you say that, no, we have. I'm not going to use this, so I just want to use it to explain or to illustrate something. You can just say 1 year. Are you getting me? 2 year. Year one. Year two. Year three. Year four. Year five. Year 6 till you get to year 15. Are you getting me now? And we were told that year 1, year 2, year 3 is what? Year 1 is 100,000, year 2 is 150,000, year 3 is 200,000. But year 4, they said from year 4 to year 15 is what? 250,000. That means year 4 will be 250,000. I'm not going to use this. Year 5 will also be 250,000. Year 6 will be 250,000. Till year 7 250,000, year 8 250,000, year 5 9 250,000 till you get to year 15 again. Are you getting me? Discount factor now. You will now calculate the discount factor for year 1, discount factor for year 2, discount factor for year 3, discount factor for year 4 till you get to year 15. Are we together now? But I don't actually have time to be going through all those trays. Are you getting me? So I can actually use annuity formula to get my discount factor for what? For year 4 to year 15, since there we are going to generate the same cash flow from year 4 to year 15. So I can actually use discount factor annuity formula. Now this is how you are going to do it. If you want to use annuity formula, just calculate the annuity discount factor for annuity. That is for present value. Now present value discount factor, annuity of 15 years, that is the present value. Now present value of annuity discount factor for 15 years. Then you now calculate discount factor for year 1, for year 2, for year 3. You add it together, then you subtract it from the annuity, present value of annuity that you have calculated for 15 years. Or you calculate the discount factor from year 1, discount factor from year 1 to year 15. Discount factor of year 1, discount factor of year 2, discount factor of year 3, discount factor of year 4, discount factor of year 5, discount factor of year 6, discount factor of year 3 till you get to year 15. Are you getting me? But don't forget, we are only looking for discount factor from year 4 to year 15. You will now add it together. That is discount factor of year 4 plus discount factor of year 5 plus discount factor of year 6 plus discount factor of year 7 plus discount factor of year 8 plus discount factor of year 9 till you get to year 15. You add it together. Whatever you get is the annuity for what? For discount factor from 4 to 15 years. Let me illustrate what I'm trying to say. So you can see this now. This is it now. Discount factor of year 1, of year 2, of year 3, of year 4, of year 5, of year 6, of year 7, of year 8, of year 9. Do you get like that? But I don't need all this. I only need discount factor from year 4 to year what? To year 15. So if I add 0.683, 0.51, 0.621, 0.564 to 0.240, I'm going to get 4.12. Do you get now? No, 5.12 rather, 5.12. So the discount factor for year 4 to year 15 will now be 5.12. Are you getting it? And then you multiply it by this. You can say that that will be C14 equal to sum C14 to D14 to D14. Do you get now? So we now have everything together. Don't forget we are calculating value in use. We add everything together. That is E11 sum 11 to E14. So we have 1,644,860 do we get. So these are value in use now. These are value in use. So let us now go to our workings now. Our workings. Don't forget, we want to calculate impairment loss. My words. My carrying amount. Let us abbreviate this. Approximate this rather to 1.6 million. So you get, or 1.645 million. 1.645 million. So you XYZ Limited calculation of impairment loss. So don't forget carrying amount, and our carrying amount. Okay, let me do something here. We are keeping millions. Let me keep my million here. My carrying amount is how much? My carrying amount is how much? My carrying amount. Okay, let me check sheet 2, where I put my workings. My carrying amount is 1.98 million. 1.98 million. 1.98. Then my recoverable amount now. Recoverable amount. So I will now say that it is what? It is the higher of we have fair value less cost to sales. Our fair value less cost is 1.5 million. 1.5 million. Right. Let's keep our naira sign here also. Million. So having done that, and then we have value in use. So what's our value in use? I think we have 1 point. Our value in use is 1.645. 1.645. Just say 1.645. So if we check it now, which one is the higher? Between 1.645. Which one is the higher? Between 1.5 and 1.645. Definitely 1.645 is the higher. So that means we are going to pick this one. Do you get me that or now? The recovery amount is the higher of fair value less cost to sales and value in use. And our fair value less cost to sales is 1.5 million. While our what? Our value in use is 1.645. 1.645 is greater than 1.5. Therefore, we pick 1.645. Do we get? So having done that, we now what? We now subtract it. So our impairment loss now. Let me write it here. My impairment loss will now be 1.98. That is carrying amount minus what? Minus recoverable amount. Let me just say it's equal to 1.98 minus 1.645. So this is our impairment loss, 0.335 million. Do you get like that? So that is our impairment loss. I think the second question asks us to show the accounting entry, just the way we do the first question. So our statement of comprehensive income now, statement of financial position, financial position. Now we have what? We have our PPE to be what? To be our carrying amount, which is 1.98 minus what? Minus 0.335. So come here. Equal to. Do we get? So this is our impairment loss now. Our what? In our statement of financial position, we are going to have this. Then we move to income statement. So our expenses, under our expenses, under our expenses, we have impairment loss, which will now be what? Which will now be 0.03, no, 0.335. I believe we get this example or this question we just finished solving now. I believe we get it. If you don't get it or you have any question, please let me know in the comment section. Let me note it in the comment section, please. Thank you.